Morning, Steve here in Chicago with the morning grain comments. Well, we're consolidating after yesterday's gains. The market is still in the grains, looking for some news on the U.S.-China trade issues. Continues to be talk that they're close to a deal. The Chinese will be visiting Washington this week, and we'll see if they come up with some type of announcement that a deal is imminent. And I think the grain markets need the deal. Along with that, we need to know the shopping list and what the Chinese are going to buy, when they're going to buy, and whether that's old crop, new crop, or things of that nature, and how long they're going to buy it. But certainly U.S. ag space and farmers need a shot in the arm right now of new demand to help with this oversupply. Tuesday's a day with a lot of numbers, and the USDA said that the winter wheat crop was rated 56% excellent versus 32% a year ago. That might be just a little bit higher than what some people thought. The hard red winter wheat in the southern plains is rated above average, while the soft wheat and white wheat in the Pacific Northwest is rated a little bit below average. And most of that soft wheat decline is due to too much water. We also noted that starting next week, Monday, the USDA will start putting out their tables on corn planting progress. And we would assume that planting progress is going to be behind normal in the big U.S. Corn planting states. Some people think that the USDA's March numbers probably will be revised corn acres down because they may not get all the acres planted, maybe 1 to 2 million acres. And then maybe at the end of the day, bean acres might go up 2 to 3, in part because of the weather, but also that hopes that in a deal, China might come in and buy some U.S. beans and keep prices above break even. Export inspections, wheat running 6% behind a year ago. USDA is talking about a 7% increase. Corn 21% ahead. USDA is talking about a 3% decline, and we'll see if exports continue to decline as we get into the South American competition and harvest. Soybeans are running 29% behind. USDA is talking about a 12% decline. So again, the key there is just how much China buys and then how much competition, lower Brazil prices will be for non-China buyers. Midwest weather looks to continue to be wet over the next 10 to 14 days. And we are hearing that in the West, soybean meal basis remains firm, more on kind of a logistics issues than anything else, but that continues to be supportive to the soybean meal and soybean market. Ethanol plants are back and up and running, and I think they need corn, and that should help the basis there. So you're seeing farmers trying to lock in this improved basis and then maybe sell some cash on a U.S.-China trade deal rally. Funds yesterday, buyers of 4,000 beans, 17 corn. 4,000 wheat, 17 corn, 8,000 beans. Right now, we're showing they're short 70,000 wheat, 240,000 corn, and 55,000 beans. Makes the market vulnerable for a rally if there is a deal or a weather problem, but funds continue to focus on bigger 2019 world crops as a bearish bias. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.